First, let's talk about Brexit here real quick, because we're about 24 hours away from Theresa May triggering Article 50, but the EU seems to suggest that negotiations aren't going to start until June. How dangerous is that now for the financial sector, given the fact that we still seem to lack a bit of clarity on what Brexit means?
Yeah, no, clearly it's a very large issue on the horizon, but luckily we have time to think about it and get ready. For us, Credit Suisse, our presence in London is quite old and quite large, but we had engaged in a very significant restructuring since the end of 2015, and we've been implementing that plan. We also have quite a few options in Europe. By coincidence, we had opened and invested in a new center in Dublin, which is in the EU, where we've transferred a lot of our prime activity. We also have a good platform in Luxembourg. So we have options depending on how Brexit plays out.
So you said time, you still have a little bit of it right now, but you've seen, the banks like Goldman Sachs, they've already started at least some of their contingency plans and looking at potential new hubs and moving some jobs to other European cities. When do you think Credit Suisse is going to have?
Well, we had a plan to restructure London. A year ago, we had about 9,200 people in London, and we've taken that down to about 6,000. So it's been a massive restructuring in 2016. And our ultimate plan, which we've announced, is to get below 5,000. And those plans are not very much affected by Brexit. So that's a plan we've been implementing.
Is there something else that you're looking for in terms of clarity? Is it more about, you want to learn more about passporting rights, or you want to see at least how negotiations are?
Passporting is really the central issue, and we want to see how those negotiations are going to play out. But in reality, the European Union is a major economic zone in the world and will continue to be. And as a bank, we have been in operation since 1848, so you can imagine we've operated under many political and regulatory regimes, and we're confident that we'll adjust to whatever the final answer is.
Talking about Credit Suisse now, Tidjane, of course, there's been a lot of reports about your capital options and plans right now. What further can you tell us about those plans moving forward? Are you considering or looking into selling stock as an alternative to that partial Swiss IPO?
The first thing I'd like to say is, in a funny way, it's a positive thing that all this debate is taking place. When we started in October 2015 and announced a new strategy, we said that we would need over time 9 to 11 billion of capital. The good news is that we've made a lot of progress since then. We set out to do fundamentally 4 things. 1 was to grow profitably, 2 was to reduce the cost, 3 was to strengthen the capital position, and 4 was to deal with legacy. If you look at the progress we've made in 12 months, we've generated a lot of growth, 28 billion of new assets at higher margins. We've reduced cost by 1.9 billion. The target was 1.4, so we exceeded our targets. Capital, we started at 10.2% CET1 in mid-15. We ended 16 at 12.4. That's really massive progress. And legacy, we closed the DOJ issue, which was about 05, 06, 07, and we reduced the SRU, the restructuring unit, by 39% in 1 year. So it's been a busy 12 months with a lot of progress. The IPO was a capital backstop, and we were clear about that in February, which has really helped us go through that restructuring period. And now we've made so much progress that we can consider other options, and that's all the update I can give you today.
So are you talking to banks about a capital raise at the moment?
We are not talking to banks. We are just considering options. There's been a lot of reporting in the media. We've been very clear in February when we announced our full year results that the IPO was an option, that the preparation was continuing, and we were looking at other options, and we'd update the market as soon as possible.
Now, we did hear from David Harrell from Harris Associates, one of your top shareholders, and it was interesting. He actually said, look, Credit Suisse doesn't exactly need to do a capital hike, nor does it need to list its Swiss unit. Do you think that, what do you make of a statement like that? Do you think that Credit Suisse actually has the strength to generate the capital it needs on its own just to close that gap?
First of all, as CEO, I'm pleased that we've made so much progress that there are now serious investors who think we don't need to raise capital. That's enormous progress compared to where we started. And when you look at what investors think, there's a broad range of views. It's the same thing in the sell side. You'll see that the sell side notes go from those who say Credit Suisse doesn't need any capital to those who say Credit Suisse needs very large amounts, much more than anything we've ever considered. So that's the range of views, and that also shows you that it is a complex decision, which is why we're taking our time to make it. But the good news is, in any case, we've given a range of needs, which is reasonable. We've talked about 2 to 4 billion medium term, and that is not life-threatening. And it's good news that we've made so much progress that we've reached this point.
So besides the IPO, besides the capital raise, what other options are exploring at the moment to raise that 2 to 4 billion?
I mean, I completely understand why you would want to ask that. you will allow me to reserve maybe that for my board first. We'll discuss it with the board, and trust me, we'll update you. We know the market wants an answer. We know the market needs an answer. We're working diligently, and we'll give a very clear answer in due course.
Is the base case still then taking the Swiss unit public, or if that's the case, then when will you decide?
It's an option. We've always talked about it, saying markets permitting, and we've always said that the board had made no decision, but that's an option. So you can only exercise an option if you're if you're ready to exercise it. So the preparation for the IPO is underway and has continued.
What would be the benefits of such a listing?
Sorry?
What would be the benefits of such a listing?
Look, if you look at the Swiss unit, the fact that we've had to get it ready for an IPO, we showed that profit is up 15% in 2 years. Profit was up 9% this year. There's been a lot of energy and mobilization within the Swiss business unit in anticipation of that IPO. So it had a capital benefit, it also had operational benefits. But again, if you look at what the bank is doing, we've been restructuring our markets activities. We've almost finished that. We've done the right sizing of global markets. Within a year, global markets have come back to profitability. That was not expected by the market in Q4. In IBCM, we've gained market share across the board. In M&A, we did 6 of the top 10 transactions in the world in 2016. In DCM, we gained market share. In wealth management, things are working very well. So our issue is really to deal with the legacy that has been accumulated. And as soon as we do that, you'll see the capital position improving.
I want to get closer into your annual report that we got on Friday. You increased your bonus pool for 2016. Are you starting to feel the pressure now of retaining talent after these cost-cutting exercises?
Yeah. First of all, we've taken it down quite significantly the year before. So it's an increase from a much reduced basis. That's the first comment. The second one is, as I described, people worked very hard in 2016 and generated very good results. In wealth management, we believe we beat the competition in every geography in terms of asset accumulation and in terms of margins. IBCM gained market share across the board. Global market came back to profitability. So our teams worked very hard and deserve to be remunerated for that and produce good results. The past is the past. We cannot punish them for decisions that were made by a long time ago.
So you've raised your bonus pool by 6%, but you've also saw a second annual loss. Can you explain that dynamic?
Well, the losses, look, this is a turnaround, as you said in your introduction, which means that there is a lot of legacy to deal with, and that's what generating the losses. We've made 4.2 billion of profit in 2015. The losses were an accounting write-down of a goodwill on an acquisition made 15 years ago. Those are the facts. Same thing this year. We made 3.5 billion of profit. The losses are the result of cleaning up the restructuring unit. So yes, there is no way to deal with the past without generating losses, and we knew when we embarked on that journey that tackling those issues which had not been tackled for a long time would generate losses. So there is no direct relation between those losses and the work done by the current teams. We pay for performance. When in 2015 the performance went down, we cut bonuses by 36% in global markets and by 36% in IBCM. This year the results are better. People got a better bonus, and that's the philosophy we use for our remuneration.
In terms of your cost-cutting schedule now, what do you see the bulk of the job losses are going to be? Is it going to be more towards the investment banking side? You've seen a bit of pressure in your equities?
Look, we want to be efficient. Okay? The first year, the bulk of the cuts came from global markets, where we really were challenged, the model was challenged. We had to create operating leverage. We took the cost from 6 billion to 5.2 billion, and that's what allowed the business to come back to profitability. The rest of the cuts are pretty spread. Every business unit basically has an efficiency program underway, including including Asia, and is implementing it, because that mantra of efficiency for me is a condition for survival. The world is moving forward and is getting more and more efficient. If a company doesn't every year improve its efficiency, it's falling behind.
So when do you think that the job cuts are going to be enough then? What do you look at?
We're not targeting job cuts per se. We really are trying to improve productivity. And in a number of places that involve job cuts, but we always try to minimize those. That's not an end in itself. What we want to be is competitive, create operating leverage. We have another year of cuts. We said that we'd do about 4 billion in total. We've done about 2 in the first year. We've done another 1 this year and a bit less than 1 the following year. So the brunt, really, 16, we hope, was the toughest year in terms of cuts. There's more cuts this year, a few more next year, but we're starting to come out of that period.
Will Credit Suisse be profitable in 2017?
I'm not allowed to make profit forecasts, but we gave you indications in January that were very positive. We were up 100% in credit. IBCM was up 90%. That we're in positive inflows in every division. So we're working very hard to be profitable.
Let's focus on your business in Asia as well, because you just had to actually revise your 2016 earnings, in fact, to the downside. Can you explain what happened there?
Yeah, we've actually refined our targets, because initially we went in with the global targets for Asia. And as we run the business and as we run the new structure we have what we call the wealth management connected activities. For wealth, it's a mouthful. Wealth management connected activities, which is basically the traditional private bank, what we call IBCM, so investment banking, capital market, advisory and underwriting, and financing, lending. We brought those three together, and it's really been a huge success. Profit is up 65% year on year. And we've separated the market-dependent activities in a global market division, and those are very market-dependent. What we've learned is that the volatility of those activities is higher than we thought. So we've really now defined 2 targets. The wealth management target actually has not been revised. We've kept the target we announced in 2015. The one that is market-dependent has been revised downwards, as you described.
Yeah, so you have slashed a few of your profit targets. I've also let a few people go on your equity side in Asia. Does it say anything about the wider sector and about Asia? You know, do you think that Asia is still key to your strategy now?
It is key to how we view the world economy. I mean, we have always said that we had a balanced approach between developed markets and developing markets. We have the good fortune of having a massive presence in developed markets. Our Swiss bank is very large and very profitable. Our exposure to the US global market, IBCM, is very strong. And then we have good exposure to emerging markets.
Is your view different now than it was back in 2015?
I mean, really, your view, I think one's view always changes. I hope so, because I've learned a lot since 2015. But in terms of our macro medium-term view, no, it hasn't changed. We still believe that there's plenty of growth in developed markets, which we're capturing, but also plenty of growth in emerging markets. Asia, our belief in the region is total, which is why we're here. The AIC is the 20th anniversary of our conference in Asia, and we are strong believers in Asia.
Just about 30 seconds left, Tidjane. I want to get your take on, in terms of wealth management, what excites you the most here as we look ahead to 2017?
Oh, it's really our clients, our clientele. All I do when I'm here is meeting clients, and there are fantastic people who create enormous value and wealth for Asian economies and populations.